Yes. Um, Increase the volume. Yes, everyone. Am I audible to all of you? Yes. So, a very good morning to all of you. A very good morning to all of you. Yes. And now, all days, it is going to be an audit morning. Right? So, we are going to be discussing the subject of audit over here. Right. So, yes, you are all in the process of becoming the chartered accountant. And then the moment you talk about chartered accountant, what is the first thought which comes to your mind? Money, okay. Tax, apart from that? Yes, what comes to your mind is the light off, okay. Okay, yeah. Right, so the first thought which comes to your mind is regarding the audit. And what is the name of your subject in intermediate? Auditing and assurance, okay. So what would you mean by the word audit over here? Right, what would be meant by the word audit? What do you understand? Okay, a chartered accountant, they say that he does an audit. So what does he exactly do? Right, chartered accountant, they say they do the audit, they sign the audit report, they have their signature. So what do you mean by audit? Right, have you ever crossed a road? Have you ever crossed a busy street? Right, like a highway or a main road over there, and then you have to go from the left hand side to the right hand side, and then you see lot of trucks and buses and two-wheelers and bicycles and auto rickshaws and all of those coming, and now you have to cross this busy street. How do you cross the street? Looking at your phone? You cross the street, you are like just looking at your phone, and you start walking from left to right. Right? Everybody else should take care of that you are coming, so there should be no truck, no scooter, no motor coming over there. No, but what you do? You look left, you look right, then you tell the vehicle to wait or you wait. One of the two of you have to wait over there. And then after that, you proceed with the crossing of the road. Is it right? So actually, even when you cross a road, you do an audit. Is it right? You understand? Right? Did you do an audit? Yes, when you cross the road. Right, so audit is not only there in the classroom, or it is not only going to be in the CA firm. Audit is there everywhere in life. And you know, how did the word audit come from? The word audit has been derived from the Latin word audere. Right, the word audit has been derived from the Latin word audere, A-U-D-I-E-R-E, which means to listen. Right, we have audio, right? We say audio, video, right? So audio means what? Anything which has got to do with the listening. So here also what we have, the word audit has been derived from the Latin word audere, which means to listen. Right, so where did the concept of auditing start? So it's said in the Greek and Latin government departments. Right, in the government departments, they used to maintain the accounts. But now how do you come to know that these books of account which have been maintained, are they correct? Right, but that there is no fraud in these books of account. There is no error in the accounting of the books. Should not happen, no, that the actual revenue of the company, sales of the company is 200 crore, and what is recorded in the books of account is only 150 crore. Right, so will such accounts be reliable? If you take any decision on the basis of such accounts, are these accounts reliable? No. Why? Because they have only been accounted. But whatever has been accounted, you need to check whether it has been correctly accounted for. Right? So we need to check for the reliability of the accounts. And in order to check for the reliability of the accounts came in the concept of the audit. Right? So that is why these Greek and Latin government departments, the accounts used to be prepared. And they say, but how do we rely on these accounts? We cannot rely on these accounts. So they used to call an independent third person over there. And he used to listen to whatever accounting used to be done in the company, and then after listening he used to say, oh yes, whatever you have accounted, it is correct or it is not correct. But today's time it is not possible that you go to Infosys or you go to Tata Motors and you tell them, okay, tell me what all accounting you have done, I'm listening to you. right? It's not possible, right? So today the methodologies, the procedures of conducting an audit have undergone a change. You understand, how you do an audit has undergone a change, but the concept is still the same, that one person will do the accounting and another person will do the checking of the accounting. And that is the origin of the concept. Is it okay if the person who's done the accounting himself does the audit? Like you have written your paper and you only evaluate your paper, you only give whatever marks you want, no problem at all. Yes, no problem, 120 out of 100, 104%. Nowadays, CBSE students, they get 99.93%. They get 98.93%. So I think nowadays, now only what is left is for them to get 103% or 104% or something like that. So is it possible that the person who is preparing the accounts, allow him only to do the checking? No, it has to be done by an independent third person. Can you tell an employee of an organization that you do the checking of the accounts? No, you cannot tell an employee of your organization also. Right, so what we are studying or telling over here is regarding the auditing and assurance. Right, so auditing is a type of a checking, it is a type of an examination which is being done. And why this audit is being done? In order to give an assurance. You know, to give an assurance to somebody, you give an assurance that don't worry, you will pass, okay? Or you say don't worry, anyways, all these days you never studied, so you're not going to pass. And whichever way, you can give an assurance to the person. Okay, don't worry, it will not rain. Now, as if it's in your hand, okay, whether it is going to rain or not rain. But you are giving an assurance over there, right? So which is a broader term? Is audit a broader term or assurance is a broader term? What do you think? Right, assurance. And audit is one type of assurance. Audit is one type of assurance which is being given. And what are we giving the assurance regarding? The accounts of the company, the financial statements of the company is regarding what we are giving the assurance, right? So that's the name of your subject, auditing and assurance. 100 marks theory subject, and 100 marks theory subject that has to be put into the double inverted comma. You understand? It's not a practical subject like accounts or FM or costing or any other tax or so, right? Wherein you have the formulas and you have the formats and then you just know how to, solve those particular problems and you're able to solve. Here you have to write and write and write in the entire duration of the paper, right? But there is some, good part in the paper also, that out of this 100 marks, we have the 30 marks of the MCQ. Right, so 30 marks what we have in the paper is the MCQ, right? Then after that, next 14 marks of our paper are regarding the correct, incorrect, right? Correct or the state whether with reasons whether the following statements are correct or incorrect. And then last 56 marks of our paper is regarding the theory, right? This is the entire theory in the paper, right? So 30 marks MCQ, so you have 10 MCQs of 2 marks each. You have 10 MCQs of 2 marks each and 10 MCQs of 1 mark each. Right, so how many MCQs you have in total in the paper? 20 MCQs are there, right? There is no option over there. All 20 MCQs you need to solve. Right, then after the 20 MCQs, you have the 14 marks of the correct, incorrect, right? So there are 7 questions over there, 2 marks each. Right, 7 questions into 2 marks each, right? So 7 into 2, 14, right? They ask you 8 questions, but out of the 8, you need to solve any 7, right? So here you have an option of 2 marks over there. You understand? They ask you 8 questions. Out of the 8, you need to solve any 7 questions over there. So that is 7 into 2, 14 marks over there. And so this is, right, the theory part of the paper. This is question number 1. So correct, incorrect is compulsory. Right? This is the question number 1, which is regarding the correct, incorrect, which is compulsory. And then after that, you have question number 2, question number 3, question number 4, question number 5, and question number 6. And out of these 5 questions, you need to solve any 4 questions. Right? Attempt any 4 questions out of the remaining 5 questions, and each question is for 14 marks. Right? So 14 into 4, that gives you the 56 marks of the theory. Are you understanding that, right? So 56 marks of the theory. So you have question number 2, 3, 4, 5, 6. Out of this question number 2, 3, 4, 5, 6, you have to attempt any 4 questions over there. Any 4 questions over there. So you can select like say 2, 3, 4, 5, 3, 4, 5, 6, whichever. Right? So one big question, like one main question itself is an option, right? Any 4 out of the 5 questions. And each sub-question, it is of 14 marks, right? So question number 2A, B, C, D. Then question number 3, A, B, C, D, like that. So these questions are going to be for 4, 4, 3, 3 marks, right? So it is going to be for, yes, 4 marks, 8 marks, and then after that you have the 3 marks and 3 marks. Right, so 4 marks, 4, 8, 9, 10, 11, 12, 13, 14. So that is the breakup of the 14 marks over there. Are you understanding? That is the breakup of the 14 marks over there. Right, so in total, how many answers you need to write in the exams? 20 MCQ, 7 correct and correct. Am I right? 20 MCQs, because 10 MCQs of 2 marks each and 10 MCQs of 1 mark each. Then 7 correct and correct. They ask you 8, out of that you need to write down any 7, and then after that attempt any 4 questions out of the remaining 5 questions, and each question has 4 marks, right? So how many questions over here? 16 questions over here, right? So 20 questions of the MCQ, 7 of the correct and correct, and 16 of the theory part of the paper, right? So 16 plus 7, that is be 23, and plus 20. So in total, 43 questions are going to come in the paper, more or less. You understand what you need to attempt in those 3 hours over there, or out of the thousands of concepts that we are going to study, how many questions are going to come into the exam? There are these 43 questions which are going to be coming into the exam. And every concept, every chapter, every topic that we study, we need to look at it from 3 dimensions. What are the 3 dimensions? Okay, for this particular topic, what could be the MCQ which could be asked in the exam? What could be the correct and incorrect which could come in the exam? And what is the theory question which could be coming in the exam, right? So these are the 3 dimensions we always need to think of. I call it as the 3D, 3-dimensional study, right? What is the 3-dimensional study over there? Regarding what type of MCQ could come for this one, what could be the correct and incorrect for this one, or what could be the theory question which we need to write for this one. Are you understanding that? Very important in the audit paper, one is the understanding, that you need to understand the concept. You should be able to identify the question which is being asked in the exams. And after that, you should be having some part of the, some part of the audit paper is dependent upon memory. Like you cannot think on your own regarding how this particular answer is to be written or what is to be written in the answer. You have to exactly write down the contents which are there in the study material of the ICAI, right? So one, you need to have the understanding so that you are able to identify the question, you know what is the answer to be written. Then after that, you should have the memory. You should be able to remember the points which are required to be written over there. And then also you need to work on your presentation, right? You also need to have the good presentation, good writing skills of the paper. In any one of these 3 you don't have, and it becomes a problem for the audit paper. You understand? You don't understand the concept only, then you will write down something which is totally irrelevant, and the examiner will start laying eggs in your paper. You understand? Big zeros in the entire paper being put over there. It big. Then they say, ma'am, why such big zero? Even though if they write this much also understood zero. Understand the frustration of the examiner. You understand? No, so many papers he has to check, and each student is writing, oh my God, any of their own whims and fancies over there. So that is why they say, no, you deserve a big zero over there. Why? Because there is no negative marking. Had it been negative marking, they'll ask, how much you got? You say, I got -18, I got -23. Okay, but thankfully there is no negative marking in the paper, right? So only what is the possibility is getting the zeros over there, right? So anyways, right? So that is why very important is the understanding. Then you should be able to remember the points, and then you should also have the good presentation, the proper time management, the good handwriting in the paper, and so right. So all these aspects are required to be considered together. Okay, right. Then what about, like, what is there in the syllabus? What all are the chapters that we need to discuss, right? So one, I have told you regarding the format of the paper. Is everybody with me? Right, so we've had a brief understanding regarding the format of the paper, and now just let's have a quick look regarding the chapters which are there in the syllabus. Right, so one chapter which we have is regarding the introduction to auditing. Right, so going into the basics of auditing, like what is an audit, what are the advantages of an audit, what are the limitations of an audit, what are the types of audit, what is a joint audit. Right, so just having an initial discussion regarding the concept of the auditing. Right, then after the introduction, you have some basic concepts in auditing. Right, the basic concepts in the auditing. Like, say if you're watching a cricket match, or you always watch a cricket match or whatever it be, can you tell me some terms related to cricket? LBW. Now imagine in my life, I have never seen cricket, or say a 3-4 year child, never in their life they have seen cricket, and you tell in front of them, "Arey LBW, LBW," usko kya samjhega? And what will that child understand? Ke what L, what B, what W? Or you say over. No, general meaning of over is over. Over, na? Finish. No, here you say over, over. So what 6 balls is equal to 1 over? Or you say boundary. No, generally India-Pakistan border. You understand? No, that is what is boundary for you. That boundary is like, Lakshman Rekha, no, that you are not allowed to go beyond this point or not allowed to come beyond this point. But here in cricket, boundary means 4 runs over there, right? Then you have power play, then you have the third umpire, the DRS, and so much of terminology, hat trick, and then maiden over, and so many concepts over there, run out and catch it, so many over there, right? So is there some terminology related to cricket? You understand? Say, assume that you had, now whatever terms I told you right now, I think all of you would have understood at least few of those terms. Say, had you not had an understanding regarding these terms, would you have enjoyed watching the game of cricket? You understand? Would you have enjoyed, or would you have understood also the game of cricket in that case? No, any game for that matter, let it be football, let it be basketball, let it be badminton, tennis, or any sport, golf or so. You have to know the terminology. You have to know the rules related to that particular sport. Only then you can appreciate or understand that sport. Like, doctors, they talk about which drug, which medicine is to be given to the patient, or what surgery and which organ of the body is affected. No, you don't understand what they are talking about, so it won't make sense to you. You understand? Now, similarly in audit, there is a term called as the audit risk. There is a term called as the audit evidence. Then there is something called as the audit materiality. Now, these are the terminology related to audit. Okay, what is audit risk? What is audit evidence? What is audit materiality? Right? So, all that is discussed in this chapter, which is regarding the basic concepts in the auditing. It's basically a chapter which talks about the terminology of the subject. Are you understanding that? Okay. Right. Then when the auditor, he is appointed to do an audit, he has to issue an engagement letter. Right, engagement letter, because you doing an audit of Infosys or Tata Motors or so, you are doing it's an engagement over there. The client has engaged you, the company has engaged you to do the audit, right? So you issue an engagement letter, and at the end of the audit, you issue the audit report, right? So you also have to issue the audit report, right? So we have a chapter on the engagement letter and the auditor's report. Then we have a chapter on the risk assessment, right? So we have to understand this concept of the risk assessment and the internal controls. Have you ever heard this term, internal controls? Yes, can you give me an example of any internal control? Internal control, control which is there internally, simple. And a control which is there within the organization. Can you tell me what control? See, here many of the students are not wearing the ID card, so it's a lack of internal control, is it? You understand? You should be wearing the ID cards, right? Right? So that's an internal control, that students who have enrolled for this particular batch, those who have paid the fees, only those should be allowed to sit into the classroom, and only to those students the notes should be distributed. You understand that? Like if you go to a Sarvana store, or if you go to a big bazaar or somewhere over there, you just pick up whatever you want in the basket, and you pick up whatever you want in the basket, and you can then put it into your bag and get out of the store. No, there are a lot of uncles and aunties standing over there. You understand? Uncle, auntie there. Apart from that, that barcode scanner is also there in many of these departmental stores or malls. Like if you go out of the store, or even if you happen to reach near the exit without doing the billing, it will start making the beep sound over there. Right? That some particular, that label magnetic, you know, their particular product code has not been removed, and that is why it ensures that you don't leave the store without doing the billing. You understand that? And whatever is the items in the particular organization, is it their inventory? Whatever is there in Shoppers Stop or Lifestyle or Big Bazaar or any of these stores, right? Whatever is there in the stock over there, it is their inventory, right? So it is the asset of that company. Is it a current asset of that company or non-current asset? Good, not bad. Okay, right, so that's a current asset over there in their inventory, right? So obviously, do they need to safeguard their inventory, or just anybody come and take away the inventory? Like for the G20 summit, you know, they decorated the country. They said so many foreign delegates are coming, so let us do beautification of the airports and of the main roads, highway from where the delegates are going to pass, right? So for that, what they did, they put plants. And a very nice green, you know, pots, big pots, and nice different varieties of plants. Then what one uncle did? He took his car, he came near the plants where they are kept, he opened the back side of the car and started putting all the plants over there and taking them away to home. No, my God! And then next day, newspaper photograph coming that uncle is taking away all the plants which have been put for G20 decoration. You understand? No, there on the street also, I think you need to put a CCTV camera, or there near the plants also, there has to be a security guard. Okay, don't take these plants. These are not yours. This is not your personal property over there. Right? But what is it I'm talking about over here? That's the safeguarding of the assets. Like if you go to any shop also, you see the cash box over there. You see the cash which is attached to the computer. Cash box which is attached to the computer. Only after the bill is generated, it automatically opens. You understand? And then after that, there is 100 rupee note section and 500 rupee note section, and then the coins are kept over there. And then after that, you give them the money, and then after that, the exchange is given to you, and they again lock it, and then it will open only when the next bill is being generated. Right. So anyways, what are all these? These are all internal controls in the organization to prevent the fraud error. Right? That there should be no fraud, there should be no error which should be happening, right? So risk assessment and internal controls. Then one of the major concerns which is there for the auditor is regarding the fraud, right? So we have an exclusive chapter which talks about the fraud and the responsibilities of the auditor in this regard. Right, then we get into the technicalities of the audit regarding, you know, how to maintain the quality when you do an audit. So you have the audit quality control and the audit documentation, right? Audit documentation is again what? You have to prepare an audit file regarding whatever work you have done in the audit, right? So that's regarding the audit documentation. Then you need to prepare your audit strategy, right? You need to prepare your audit plan. You need to prepare your audit program. Right, so we have a chapter on the audit strategy, audit planning, and the audit program. Right, so that is again the technical chapters over there. Right, then after that, in an audit, can I compare the last year revenue of the company with this year revenue of the company? Right, or can you compare the marks which you have got with the marks which your friend has got? You should compare, no? You can compare. If you want, you can, oh, you got 200 out of 400 in foundation. Oh, I got 201 out of 400 in foundation. So I'm 1 mark ahead of you. Okay. Right. So anyways, are you comparing your marks with another student? Right? Are you comparing your marks with another student? Yes. Or can you compare the revenue of what do you say, Infosys with Tata Consultancy? Can you compare the revenue of Tata Motors with Ashok Leyland or with Mahindra? Right? Can you compare with them, because all of them are the automobile industries? Right? Can you compare with them? Yes. So when you're doing such comparison work, yes, you are performing the analytical procedures, right? You are performing the analytical procedures, right? We have an entire chapter to discuss about the analytical procedures. Right. Now in a company, like imagine Zomato or Swiggy or Myntra, Flipkart, Amazon, how many transactions they have? Or a bank ATM, how many withdrawals and banking transactions take place every day? Lakhs and lakhs of transactions, thousands of transactions take place every day. Every day, thousands of transactions. So into 365. So for the year, it is going to be so many transactions. Okay, now auditor, when he comes for the audit, is he going to do 100% verification? Is he going to do the checking of all the transactions which have been recorded in the books of account? No, the auditor is going to go for the audit sampling, right? So how to do the audit sampling, right? That is what we discuss in this chapter, right? So when you go to the ATM and you withdraw the money, right? When you withdraw the money, you put your ATM card over there and then you put your PIN over there and it says what would you like to do, and you say cash withdrawal, and it says please mention the amount which you would like to withdraw. So you say 2,000 rupees, and then it says please wait while your transaction is being processed, and then after that you're waiting near the ATM machine for the 2,000 rupees to come out. And you know, by the time that 2,000 rupees come out, are you all listening to me? Yes. Yes, by the time that 2,000 rupees come out, yes, you get an SMS on your phone. Yes, your account has been debited by 2,000 rupees and the available balance in your account is so much. Is it not that, you know, the moment you withdraw the money from the ATM, there is the security guard at the ATM who goes running, you know, from the ATM to the bank and says, oh, this particular account holder, he has withdrawn 2,000. Please, you know, pass an accounting entry for 2,000 rupees. You imagine all the people in the world will be running here and there. Can you imagine the chaos in that case? Everybody will be running from one city to another, one country to another, one bank to another for the passing of the accounting entry. So does anybody need to run from one place to another? No, it is automated, right? So we talk about the audit in an automated environment, right? The audit in an automated environment, right? Automated. Right? Nowadays we talk about the automated environment, like even if you see the Book My Show, Ease My Trip, Make My Trip, right? All these are examples of the automated environment, right? So how to do the audit in an automated environment is discussed in this particular chapter, right? So far 1, 2, 3, 4, 5, then 6, 7, 8, 9 and 10. Right, 10 chapters. I have just mentioned the heading of these 10 chapters over here. Right, then after that, yes, Companies Act 2013. How many sections have you studied so far? 10 sections. Seriously? Fakta, only 10. No, in foundation, no company law. Foundation only Negotiable Instrument Act, Contract Act and Partnership Act, and only company law also there. Only 8. 8 there, 10 here. There are 400 sections in company law. Huh? I thought at least 40-50 sections you would have done in foundation. Foundation to done already. Only so many? Okay, no problem. Whatever it is. Now, let me talk, Baba. Listen. Okay, now over here in inter-audit, we need to discuss a few sections of the Companies Act related to accounts and audit, right? So we have chapter number 11, which is regarding the company audit, right? We'll be starting with this particular chapter, right? The company audit, right? Company audit. So here we are going to discuss a few sections of the Companies Act 2013 related to accounts and audit, right? Then, you know, in company law only, there are some additional matters of reporting, like auditor of a company has to do the reporting. So there are some additional points of reporting which have to be done by the auditor, which is popularly known as the CARO, right? Companies Auditors Report Order. What does CARO stand for? Companies Auditor's Report Order. So it is an order given to the auditor by the central government that auditor, you need to report on these matters. Right? So Companies Auditor's Report Order, that auditor of the company, you need to report on these matters. Okay. Right? So you have the company audit and you have the Company Auditor's Report Order. Right. Then we have the audit of the banks. Right, so because in your articleship, one of the audits, you know, which you will be primarily doing is the bank audit, right? So earlier bank audit chapter was only there in CA final, but now they've put it in CA intermediate also and CA final also, right? So bank audit, right? So how to do the audit of the banks. Then you have the audit of the cooperative societies, right? You have the audit of the cooperative societies, right? So cooperative society audit, then you have the audit of the government, right? You have the audit of the government, right? The audit of the government, right? The government, that is the departments of the government companies and so. Then you have the audit. Do you think that PVR audit would be happening? INOX audit would be happening? Do you think that Delhi University, Sri Ram College of Commerce, the audit would be happening of that institution? Do you think of any NGO, charitable institution, even they would have to get an audit done, right? So here we talk about the audit of the different types of the entities, right? Like say hotels, like say a Marriott or a ITC or a Trident hotel, right? Will an audit be happening of the hotel also? Right, so here we talk about the audit of the different types of the entities, right? We talk about the audit of the different types of the entities, okay? And now let me ask you, company law, so you told me only so many sections. Now let me so then ask you, okay, do you know something called as accounting standard? What is it? Rules. Regarding what? Rules regarding reporting. Okay, financial reporting, accounting, okay. Why they have issued standards? Who has issued these standards? ICAI. Q, why? To standardization, to bring some standardization. Is it like only no option that is given in the accounting standards? Or do you have some options? We have some options, no? Like you have FIFO or weighted average, but LIFO is not allowed only. So within the accounting standards also you have certain options. But when a company is preparing their financial statements, their books of account, they have to follow the accounting standards. Are you understanding that? Right? So say a company, like generally, see, audit can be done of a partnership firm also. Audit can be done of a sole proprietor also. Audit could be done of a Hindu undivided family also. It could be done of a company also. So here the audit that we are mainly talking about is the company audit. Though audits can be of different types. Like right now, whatever audit I've been talking about, like you need to do the audit of the accounts. So I am talking about the statutory audit. What do you understand by the word statutory? Which is required by a statute, which is required by a law, which is like a compulsory audit, which is a statutory audit. So when you do the audit of the accounts of the company, that is what? That is the statutory audit. Did I mention to you about internal controls? Right, so now when you do an audit of the internal controls in the organization, then that is called as the internal audit. When you do an audit of the internal controls in the organization, that is called as the internal audit. But until specified, wherever I say audit, it has to be statutory audit, or you can also call it as the external audit. You can call it as the statutory audit, or you can call it as the external audit, right? So mainly it is the statutory audit, and that to say we are talking about the audit of a company, right? So company, it is going to prepare its accounts, right? Yes, company, it is going to prepare its accounts, books of account. On the basis of the books of account, they are going to prepare their financial statements, and these financial statements should comply with the accounting standards. They have to comply with the AS, the accounting standards, right? Section 133 of the Companies Act, it says it is regarding the accounting standards, right? That company, you need to comply with the accounting standards. Whose responsibility to comply with the accounting standards? The company, the management, the board of directors of the company, they have to comply with the accounting standards. Like, so say, let me take an example that the name of the company is Growth Limited, just as an example, right? So Growth Limited, I can refer to them as the client. I can refer to them as the auditee. And they are the auditee. Right? The company, the client of whom you are doing the audit, and the person who is going to do the audit is called as the auditor, right? So you have the client over here, here you have the auditor, here you have the auditee, here it is the auditor, right? So say the name of our auditor is CA Sparkle, example, right? Say the name of our auditor is CA Sparkle. Okay, now CA Sparkle has to do the audit of the accounts. Are you all with me? Right? CA Sparkle has to do the audit of the financial statements. He has to do the audit of the accounts. And now, that is why the CA, the chartered accountant, when he has to do the audit, he needs to comply with the auditing standards. He needs to comply with the auditing standards. He needs to follow the auditing standards, which are very technically known as the standards on auditing, right? So you don't call it just accounting standards, but that is, auditing standards are not referred to as auditing standards. They are referred to as the standards on auditing, which we know as the SA, that is the standards on auditing. Who needs to follow these standards? The auditor, while doing the audit of any organization. But which audit are we mainly talking about? The statutory audit, right? We are mainly talking about the statutory audit. Who has issued these auditing standards? ICAI. Who has issued these auditing standards also? The ICAI. Okay. So as such, you know, the standards which have been issued by ICAI are called as the engagement and quality control standards. What are the standards which have been issued by ICAI called as? They are called as the engagement and the quality control standards, EQCS. Are you all with me? Okay. Now, as a chartered accountant, are you getting my word? As a chartered accountant, what are the types of engagements that you can perform? As a chartered accountant, you can do an audit. As a chartered accountant, you can do a review, right? What is the difference between audit review? I will come to that later. As a chartered accountant, you can do assurance engagement other than audit or review. Or as a chartered accountant, you can provide the related services. As a chartered accountant, you can provide the related services. So as being a chartered accountant, here what they are saying, okay, what are the type of engagements which can be performed by the chartered accountant? He can do an audit or he can do a review. Audit and review both are done of the historical financial information. That is the year which is already completed. And a historical. Then apart from audit or review, what engagements he can do? Other assurance engagement. And apart from other assurance, he can do the related services engagement. Now, or chartered accountant, when you are appointed to do an audit, you need to follow the standards on auditing. Chartered accountant, when you are appointed to do an audit, you need to follow the standards on auditing. Chartered accountant, when you are appointed to do a review, you need to follow the standards on review engagement. You need to follow the standards on the review engagement. Then when you are appointed to do the other assurance, you need to follow the standards on the assurance engagement. You need to follow the standards on the assurance engagement. And when you are appointed to do the related services, you need to follow the standards on related services. Are you getting that? You need to follow the standards on the related services. So what are the types of engagements that you could be performing? Array, what are the types of engagements? You could be doing an audit, or you could be doing a review, or you could be doing an engagement other than audit or review, that is other assurance, or you could be providing the related services. When you are doing an audit, you need to follow the standards on auditing. When you are doing a review, you need to follow the standards on the review engagement. When you are doing the assurance, you need to follow the standards on the assurance engagement. And when you are doing the related services, you need to follow the standards on the related services. And whatever be the type of engagement that you are performing, are you listening to my words? Whatever be the type of engagement that you are performing, that whether you're doing an audit, or whether you're doing a review, or whether you're doing an other assurance, or you're doing a related services engagement, you always have to maintain the quality of your work. So for quality control, we have a standard SQC, right? So standard on quality control, that is SQC, the standard on the quality control, SQC. So what are the 5 types of standards? SA, SRE, SAE, SRS and SQC. Okay, right. Then how many SQCs are there? How many standards on quality control? 1 standard on quality control. How many standards on review engagement? 2 standards on review engagement. How many on assurance engagement? 3 standards. And how many related services? 2 standards. And how many auditing standards? We have 38 standards on auditing. right? We have 38, right? So 38, 39, 40, 41, 42, 43, 44, 45, 46. So in total, how many standards are there? 46 engagement and quality control standards. In total, how many standards have been issued by ICAI? 46 engagement and quality control standards. Okay. Out of this, SRE, SAE, SRS not applicable. And not applicable for your exams. SQC1 applicable. SQC1 standard on quality control applicable. And out of the 38 standards on auditing, 26 standards on auditing are applicable for the intermediate audit. Right, 26 standards on auditing are applicable. So as such, for intermediate, how many standards are applicable? 27. One standard on quality control and 26 standards on auditing. Are you getting that, everyone? So 26 standards on auditing and one standard on the quality control, right? And at CA final, you have the 36 standards, one standard on quality control and 35 auditing standards. SRE, SAE, SRS is not applicable at CA final also. Okay, so you have the 36 which are applicable at CA final, but right now for intermediate you have the 27 standards which are applicable. So anyways, where is the list that I was preparing? Right, so in this list, the last name which I want to write over here is regarding the standards on auditing. Right, so standards on auditing. So few of these standards I'll be discussing with you along with the chapter, and few of these standards I'll be separately discussing with you. But we will ensure that we complete with all the 27 standards. Right, we will ensure that we cover all the 27 standards which are applicable for your exams. Are you understanding that something called as accounting standards? There is something called as the auditing standards. Who needs to follow accounting standards? Accounting standards, the company, the management, when they are preparing the accounts of the company. And who needs to follow the auditing standards? The auditor, when he is doing the audit of the accounts of the company, right? When he is doing the audit of the accounts of the company, right? So initially, when ICAI introduced the standards, they call them as the statements on the auditing practices. Right, they were called as the statements on the auditing practices. So 1970s or so, when ICAI, before that there were no auditing standards. Right, that time they were called as the SAP, the statements on the auditing practices. Then after that they renamed them to be called as the AAS, that is the Auditing and Assurance Standards. So rather, when I had written my CA exams, that time I had studied the AAS, that is the Auditing and Assurance Standards. That time we had AAS1, AAS2, just as you have AS1, AS2. We had the AAS1, AAS2 and so. And then after that, somewhere around 2008-9 or so, they renamed these standards to be called as the Engagement and the Quality Control Standards. Right, and I've already told you the 5 types of the Engagement and Quality Control Standards. You have the SA, you have the SR, you have the SAE, you have the SRS, and you have the SQC. Is it clear to all of you? Right, you have these 5 types of the engagement and the quality control standards. And who issues these standards? The AASB of the ICAI. Who is AASB? The Auditing and Assurance Standard Board of the ICAI. Right, so ICAI has different boards over there. Right, so one of the board which they have is the Auditing and Assurance Standard Board. Right, you have the Auditing and Assurance Standard Board which has issued the, the engagement and the quality control standards. Yes, the engagement and the quality control standards. Okay, just as you have an SA. What is an SA? Standard on auditing. Are you with me, everyone? Right, just as you have an SA, correspondingly there is an ISA also. What is an ISA? An International Standard on Auditing. Right, who has issued the standard on auditing? The ICAI, the Auditing and Assurance Standard Board of the ICAI. Who has issued the International Standard on Auditing? It says the International Federation of Accountants, the IFAC. The International Federation of Accountants have issued the, the International Auditing and Assurance Standard Board have issued the ISA, the International Standards on Auditing. But in the national context, what do we have? We have the standards on auditing, the SA. Okay, now this SAs, no, they are under the different groupings. Like you have the first standard only SA 200. Okay, now why it is not AS1? So then you say, oh my God, 200, then how many are there? So it is not that way, because you know, the SRE, they come in the 2000 series. SAE, they come into the 3000 series. SRS, they come into the 4000 series. And as standards, they come into the 1 to 899 series over there. Yes, the 100 to 899 series over there. And SQC is under the 1 to 99 series. So they've given an entire series, but in that particular series, they've taken a few numbers over there. Right, like you have SA 200. So if there is SA 200, correspondingly there is also an ISA 200, an international standard on auditing, SA 200. Are you understanding that? SA 200, then ISA 200, just as you have SA 700. Right, so 700 is regarding the audit report. And okay, what should be the format of the audit report is given in SA 700. Similarly, you also have the ISA 700, right? You have the international standard on auditing also. So the point which I want to tell you is, one, there are standards on auditing, there are international standards on auditing, and auditing standards are not like SA1, SA2, SA3, SA4. They follow a different series of numbering over there. So you have a 200, then you have a 315, then you have a 320, then you have a a 500, 501, 505. Right, so as we proceed, when we go to those 27 standards, we will look into the name and the number of the standards. Is it clear to all of you so far? Right, so what did I discuss with you so far? One, the format of your paper. What is the format? 100 marks, 30 marks, MCQ, 14 marks, correct, incorrect, and then you have the 56 marks of the theory. So in total, we have to attempt some 43 questions in the audit paper. That is what we just analyzed. Okay, right, then after that, we looked into our syllabus, right, regarding the different varieties of chapters which we need to discuss. Like, so every chapter, what is the weightage? The weightage is on an average around, you know, one question comes from bank audit, one question comes from the cooperative society, government audit, different types of entity, like company audit, Caro could be some 2 to 3 questions coming in the exam, right? And this 2 to 3 marks, what I'm telling is only from the 2 to 3 questions, what I'm telling is from the 70 marks of the paper, because MCQ, we don't come to know what has been asked by ICAI. You know, for MCQ part, we don't know what questions have been asked by ICAI, how much is the weightage and how many questions have been asked or so. Right, so then anyways, as I go to a particular chapter, I'll also be telling you about the weightage or how many questions have come. Right, then what are the sources of material that you should be using for the studies of the audit? Right, so one, you have your ISM, your institute study material. Right, then after that, you have the notes which will be provided to you maybe by end of today or tomorrow. Right, so you have the notes which we have, and then apart from that, you have the RTP. Have you ever heard the term? Yes, ma'am. Seriously? Yes, okay, what is it? Right, the revision test papers which are released by ICAI. Right, then you have the MTP, mock test paper, series 1, series 2, which have been released by ICAI. Then you have the suggested answers, right, for whatever attempts are completed, right? You have the suggested, what questions have been asked in the exams. You have the suggested of the ICAI. So I recommend that at least 5 attempts. I would prefer 5 years. And I would prefer to mention over here 5 years, but minimum 5 attempts of RTP, MTP suggested you should be seeing. Now, so RTP, 5 RTPs. MTP, series 1, series 2. So put together, it is going to be 10. And suggested there would be 5. Right? This is for the additional practice purpose. See, whatever questions are there now in this MTP, RTP suggested, all of them are there in our material. Right, in the respective chapter, in the respective discussion, we'll see it over there. But exam mein kya hota hai? What happens in the exam is that all of a sudden, you see question on, one question is then on government audit. After that, there is a question on Caro. After that, there is a question on auditing standard. Then there is some question regarding company audit. So you should be able to open the file, no? Okay, from which particular chapter, which particular concept the question is being asked. Right? So it builds up your confidence, when you go through the MTP, RTP suggested of the ICAI. And apart from that, whatever notes you prepare in the class. right? Whatever running notes you take in the class, as in when I'm discussing the subject with you, whatever notes you take in the class, right? My suggestion to you would be that one, please bring a dedicated notebook for audit. Don't keep it in the behind of some particular subject over there, right? Behind accounts and behind FM, and somewhere you're writing a few pages here and there. No, not done. Okay, so keep a dedicated book for the subject of audit, 200 pages to begin with. In the entire duration of the batch, I expect at least 2 notebooks to be full. Okay, right. Then apart from that, you may make use of a few different color pens. You understand? Like, many students in my earlier batches, they used to get that Luxor color pens, 10 color pens over there, right? Or even though if you have like 3-4 color pens also, fair enough. Like, some red, yellow, green, blue, whichever color pens you want, you can get. If possible, you may get a few highlighters if you are, but don't do too much. We are not an art and craft class. Ki chalo, in school when art and craft class used to be there, used to take out all the colors and then all the brushes and everything. And so here we are not doing art and craft over here. But yes, certainly it improves our efficiency for the study of the subject. And apart from that, what you can do, you can bring a few stick notes and sticky notes, so that wherever you find any short form or any memory technique or any formula or important, just some summary you want to write over there. So just you write it, put a staple over there and keep it over there. What happens that brings the subject to life? Audit is a THEORY. The theory. EORY. Theory, double underline, double inverted comma, control B, control I. You understand? And font size 100. You understand? THEORY. Theory. And in that theory subject, you have to pump in oxygen. Right? You have to bring that subject to life. It's not that something that you listen to over here and you're not able to recollect, or you're not able to interlink whatever discussions we are having over here. Right? So that keeps you more participated in the class when you do the markings, okay? And then I don't expect too much of ma'am, wait, ma'am, I am still writing, ma'am, wait. No. Now you are CA students. CPU capacity has to be higher. You can no longer work on a 1 GB RAM or 2 GB RAM. Slowly, like a tortoise. Yo. No. One, you don't have to do a PhD on audit. For that, I am there. I will tell you whatever is the gist, whatever is the content which you need to study. And you need to be little dynamic. Right? You have to be attentive. You have to go beyond your capacity. It is like, okay, normal human being cannot sit at one place for more than 3 hours. But in India, you're not listening to me. Listen now. In India, there are only 2 types of people. One who are chartered accountants and one who are not. You understand? And in a population of 140 crore, kitne hain? Gin chun ke. How many chartered accountants in a population of doctor, engineer? Throw a stone from here. It will fall on the house of a doctor or engineer. Just randomly go in the street, engineer wala, you'll find so many people coming out. You understand? But chartered accountant, few lakh of chartered accountants in the population of 140 crore. It is the best share capital in the country. You understand? No other share capital is as strong as becoming a chartered accountant. One of the best equity you can have in your life. I'm telling you, the dividend, the bonus, the the payouts and everything which you get, like it's like purchasing an Infosys share at the time when the company started at 20, 30, 100 rupees, and now today the valuation of the shares is 2,000, 4,000 or whatever huge amount. So multiples, like the price earning is so high over there. Right? So similarly, it is forget about whatever you did to your 12th and whatever marks you got over there and whatever solid result you got in foundation and everything. Now you enter into the main nervous system of the CA course. Understand? Intermediate and final. So if 100 students enroll into the CA course, 30-40% is the passing for foundation. Then after writing a few attempts, now see foundation taking a few attempts, hey Bhagwan. You understand? And then when they'll become chartered accountants and all. But kya kare? Course is only like that. So whatever it be. So out of 130. And then out of those 30, then that is the population for intermediate. Out of those 30, 20% is the result. So 6. You understand? And then out of those 6 at CA final, again, let me say 15-20% is the results. Like, so 1 or 2 or something like that over there. Right, is the probability. So there is a lot of funnel, in the CA course, there is a lot of filtering which happens. Everybody starts climbing the Mount Everest. Many of them bottom only base camp se hi ghar bhag jate hain. You understand? Not possible for everyone to climb the entire hill or, the entire mountain or the trek over there. Right? So it requires a lot of perseverance. It is going to be a torture to listen to a theory subject, 7 o'clock in the morning, as if you have nothing better to do in life. But for everything better to do in life, for everything better to do in life, right now you have to go through the process. Gold. Gold also has impurities, right? Diamond also carbon. Under high pressure it becomes a diamond. No, you don't put pressure, kuch nahi hoga. So that means you would have understood that I am going to be 24/7, breathing in and out the subject of the audit for all of you. It is not going to be a cakewalk. It is going to be a trek. And I teach you definition of audit and then nothing of that sort comes in the exam, then what is the use? You understand? No, we have to make yes, I just want to increase your potential. That's what. I don't want a 1 GB RAM or a 2 GB RAM sitting in the classroom. Right? 8 GB, fully loaded. And latest apps and technology and all of that in the class. Right? So with that, right, so I think I have made my introductory discussion with you regarding the subject, and now let's proceed with our discussion of the subject, right? So what we'll do, I will start with the chapter on the company audit, right? So we'll start with a very interesting chapter over there, which is regarding the company audit. Okay. Right, so now open your book. Right, and yes, open your notebook, at least whatever you have, or institute study material, whatever is there with you. Right, open it, keep it in front of you. Right, and then let's begin discussing a few sections of the Companies Act 2013, which is relating to the accounts and the audit. Okay, so mainly we are going to discuss section 138 to section 148 of the Companies Act 2013. Section 138 to section 148. We'll also be seeing 128 on the way. What is section 128 of the Companies Act? It is regarding the books of account. Section 128, it is regarding the books of account. And then you have section 138 to section 148. Right? Section 138, it is regarding the internal audit. Right? The auditor who does the audit of the internal control system in the organization. Right? Then after that 139. What is 139? It is section 139 of which law? Section 139 of the Companies Act 2013. Right? So section 139 is regarding the appointment of the company auditor. Okay? Who would appoint the auditor of a company? Right, the appointment of the auditor. 140, you want to remove the auditor of the company. So what is the procedure for the removal of the auditor of the company? Right, so you have section 140, which is regarding the removal of the company auditor. So 138, internal audit. 139, appointment of the company auditor. 140, removal of the company auditor. 141 is regarding the qualifications. This is the first section that we will be starting with. The qualifications and the disqualifications of the company auditor. Okay, who can be appointed as an auditor of a company and who cannot be appointed as an auditor of the company. So you have the qualifications and the disqualifications of the company auditor. Then section 142, which is regarding the auditor's remuneration, that who decides the audit fees, who decides the remuneration to be paid to the auditor, right? So auditor's remuneration. Then 143 is regarding the rights and duties of the company auditor. It is regarding the rights and the duties of the company auditor, right? 144 is regarding auditor not to render certain services, right? So if you are the statutory auditor of the company, you're not supposed to render certain services. So auditor not to render certain services. What is the list of those services? We will study it over here under section 144. Auditor not to render certain services. So 139, appointment. 140, removal. 141, qualification, disqualification. 142, remuneration. 143, rights and duties. 144, auditor not to render certain services. 145, auditor to sign audit report. Auditor to sign the audit report. So who will sign the audit report of a company? The auditor. Then 146, auditor right to receive notice. So this is one more right given over here. Right to receive the notice of the general meeting and then also to attend the general meeting. So right to receive notice and attend the general meeting. Right to receive the notice and attend the general meeting. Right, so 146, right to receive notice and attend the general meeting. 147, if the company or the auditor does not comply with section 139 to section 146, the section 139 to section 146 not complied, then the punishment for non-compliance is given under section 147. Then the punishment for the non-compliance of section 139 to 146 is given under section 147. And the last one which you have over there is section 148, which is regarding the cost audit. Do you know something called as material, labor and other items of cost, overhead? I know. So we'll get into the detail, but that is called as the cost records of the company. And an auditor who does the audit of the cost records is called as the cost auditor. Right? So in company law, we have a section for the cost audit also. So basically now today you've heard about three types of audit. Which three types of audit? Internal audit, statutory audit and the cost audit. Okay. So section 138 is regarding internal audit. Then 139 to 147 is regarding the stat audit and 148 is regarding the cost audit. Right? 148 is regarding the cost audit. Are you understanding this, everyone? Right? So sections of the company law that we will be discussing over here. 138, internal audit. Then 139 to 147, statutory audit. 139 to section 147. It is regarding the statutory audit. It is regarding the statutory audit. And then you have 148, which is regarding the cost audit. Right? 148, which is regarding the cost audit. Is it clear to all of you? Right? Let me see. What are you writing in your books? Right? So you have section 138, which is regarding the internal audit. Right? Then 139, which is regarding the appointment of the company auditor. 140, which is regarding the removal of the company auditor. 141, qualifications and the disqualifications of the company auditor. Then 142, auditor's remuneration. 143, the rights and duties of the company auditor. 144, auditor not to render certain services. 145, auditor to sign the audit report. Then 146, auditor to receive notice and attend the general meeting. 147, punishment for the non-compliance, and 148 which is regarding the cost audit. Okay, so 138 is regarding the internal audit, 139 to 147 is regarding the statutory audit, and 148 is regarding the cost audit. Is it clear to all of you? Okay, right. So now let us talk about the audit over here. Which audit are we talking about? Audit of the statutory audit. That means we are talking about the audit of the financial statements. Can anybody tell me what you mean by financial statements? Yes, what do you mean by, okay, you say, oh yes, these are the financial statements of a company. What does it mean? Right, it means the balance sheet. What all is included in the financial statements? Balance sheet, then the statement of the profit and loss, statement of the profit and the loss, then the cash flow statement, okay, right, yes, cash flow statement, then the statement of changes in equity, the SOCE, right, the statement of the changes in equity, and then you have the notes, which is referred to as the summary of the significant accounting policies and the other explanatory information. Summary of the significant accounting policies and the other explanatory information. So when I say financial statements of a company, that means it is the balance sheet, the statement of profit and loss, cash flow statement, SOCE, statement of changes in equity, and the notes. Right? And these financial statements are prepared on the basis of the books of account. These financial statements are prepared on the basis of the books of account of a company. And now auditor, what he has to do? He has to do the audit of the financial statements. Okay, right. So, you know, after you see a movie or after you eat your food or something, like after you see a movie, what do you say about the movie? Or before you go to see a movie, what you do? You see the review of that particular movie. Like after the movie has been released, you see, know how many stars the movie has got, yes, how many stars, poor, very poor, excellent, and a 3 star, 3.5 star, 4 star, and then you decide, okay, so is there, they see the movie and then they express an opinion on the movie, and then you eat your food and then you express your opinion on the food. What opinion you express on the food? Depends who has made it, okay. What opinion do you express on food? Tasty? Disaster? Okay. Too much of salt? No salt? You understand? Delicious? Not delicious? Right. So now, to express your opinion on the food which you have just put in your mouth over there, are you using some words? Like you're saying it is yummy, it is delicious, it is salty, it is not salty, it is too sweet, it is not sweet. You have to use some words, na? Without word, how to express? That movie is good, movie is pathetic, waste of money, waste of time, horrible, you know, no acting skills, very bad music. You see the reviews of the movie also? You understand? So do they use words to express an opinion? So in an audit also what you do? You do examination, you do checking. Who's checking you do? Financial statements. What do you mean by financial statements? This is what is meant by the financial statements. Now on this financial statements you have to express an opinion. Hai kya nahi? On these financial statements which you have checked, which you have audited, which you have examined, which you have verified, now you have to express an opinion. And now do you need some words? Do you need some phrase to express an opinion? Yes. So the phrase which is used by the auditor to express an opinion is called as the true and fair. Right? That whether the financial statements of the company give a true and fair view. Once upon a time, long time back, that this is beyond dinosaur also. Like, you know, that time, the auditor used to express an opinion saying true and correct. Long time back. Now it is history. And a long time back, auditor used to express an opinion saying true and correct. But today, We don't express an opinion saying true and correct. We express an opinion saying true and fair. Because, please understand everyone, when auditor used to express an opinion on true and correct, his focus used to be only on the mathematical accuracy of the books of account. That is, you know, cost of asset 1 lakh, cost of the asset 1 lakh into rate of depreciation, say 40%, into rate of depreciation 40%. So what is the depreciation charge for the year? 40,000. You understand? So auditor only used to check this, 1 lakh into 40%, 40,000, correct, so true and correct. This is what the auditor used to do. But today when I'm doing an audit, will I check 1 lakh into 40%? Will I check what you say, the mathematical accuracy? Yes, but that is only one part of my checking today. Today what I will check, that whether all the incidental expenses, have they been added to the cost of the asset? Installation expenses, borrowing cost, and all the qualifying expenditure, whether they have been added to the cost of the asset, whether the asset is in the name of the company, whether any loan has been taken against this asset, whether this rate of depreciation is it proper. You say, oh, that 40% is not the correct rate as per Schedule 2. Schedule 2 of the company law, it gives the estimated useful lives of the asset. So I will check Schedule 2, I will check the Ind AS 16, I will check property, plant, equipment, I will check AS 10. And then I will say, okay, no, this 1 lakh is not proper, this should have been 90,000. And no, this 40% is not proper, it should have been 20%. And then I say, okay, 18,000 is the correct charge of the depreciation, 40,000 is overcharging of the depreciation. So you understand? Then I can say true and fair. You understand? Only checking 1 lakh into 40%, 40,000, mathematical accuracy of the books of account, not bothering to check kidhar se aaya, from where did 1 lakh come, from where did 40% come, how they have done, how these amounts have been derived, whether the asset has been purchased, checking nothing. Only 1 lakh into 40%, 40,000, that's it. Right? So that was okay once upon a time, but today times have changed. So auditor, you not only have to check the mathematical accuracy, you also have to check the compliance with the, you know this? Generally accepted accounting principles. What are the generally accepted accounting principles in India? Accounting standards and the Schedule 3. No, Schedule 2 is regarding depreciation, but format of balance sheet P&L, where it is given? Format of balance sheet P&L, where it is given in company law, in the Schedule 3 to the Companies Act 2013. Are you able to follow this, everyone? So generally accepted accounting principles. Yes, generally accepted accounting principles in India. Okay, right. So now auditor, you have to express an opinion on the true and fair view of the balance sheet. Can anybody tell me what I come to know by looking at the balance sheet of a company? Financial position, because balance sheet is as at 31st March, say, let me take the year end as 2026, 31st March 2026, okay, say assuming we are in 27, something like that, right? So balance sheet as at 31st March 2026, and you come to know what are the assets of the company, what are the liabilities of the company, what is the financial position. Can anybody tell me what is reflected by a balance sheet? Financial position. Can you use another term if you know? It reflects the state of affairs. Exactly. Balance sheet, it shows the state of affairs of the entity. Every day, can I prepare a balance sheet? But can I prepare a balance sheet every day? Today asset got 1% depreciated. Every day. Today so much inventory. Today so much debtor. Because balance sheet as at, you know, today, say today is 25th of April 2026, right? So as on today I can prepare, but we don't prepare every day. We prepare it at the end of a particular period. Okay, but profit and loss account, can I prepare it for a particular day? No, it has to be prepared for a particular period. And what we say, statement of profit and loss for the year ended 31st March 2026, right? So 1st April 2025 to 31st March 2026, whatever transactions have taken place, whatever sales sales and other income, whatever purchases, expenses, provision, and then you get the profit or the loss of the company. So what is reflected by the statement of profit and loss? The profit or the loss of the company for that period. Then cash flow statement, it reflects the cash flows of the company. Statement of changes in equity, it reflects the changes in the equity. And notes, that gives the disclosures, right, regarding the accounting policies and the other explanatory information. Are you understanding that? Okay, right. So if I come over here to Reliance Industries, what do you say, audit report, and if I come to the, you see over here, the independent auditors report, everyone? Right, do you see this title over here, independent auditors report? Okay, so we'll come to audit report later, but before that, if I come to their balance sheet, right, so they have the balance sheet, then they have the statement of the profit and loss, then the statement of changes in the equity, then the statement of the cash flow, and then the notes. Right, so these are the financial statements that we are talking about. Is it right, everyone? Balance sheet, profit and loss, cash flow, SOCE, and the notes. Okay, and now auditor expresses an opinion on the financial statements. We'll come to the details of the audit report later, but right now if I just want to have a quick look at the audit report opinion paragraph, what does it say? In our opinion, and to the, 1 minute. Right, what does it say? In our opinion and to the best of our information and according to the explanations given to us, the financial statements stand alone. So you have something called as the standalone financial statements, and you have something called as the consolidated financial statements. You have stand-alone financial statements, and you have something called as the consolidated financial statements. Stand-alone, that is the holding company, the parent company alone. That is only Reliance Industries Limited. What is the revenue of Reliance? What is the assets of Reliance? Liabilities of Reliance? Only Reliance company alone. But say Reliance company, the parent company also has a lot of the subsidiaries. It has a lot of the associate. It has the joint venture. Right? So the revenue of the parent company plus the revenue of the subsidiary, associate, joint venture. The assets of the parent company plus the assets of the subsidiary, associate, joint venture. So now you're preparing the financial statements for the group. That is called as the consolidated financial statements, right? Consolidated means not only Reliance but full group of Reliance. That is all the subsidiaries, associate, joint venture put together. Right? So here right now what we are talking about is the stand-alone. That is only parent company. You've not included the results or the performance of the subsidiary, associate or the joint venture. Are you getting that, everyone? Standalone and consolidated? Okay, right. So what does it say? The standalone financial statements give the information required by the Companies Act in the manner so required, and they give a true and fair view. Right? And they give a true and fair view in conformity with the accounting principles generally accepted in India. Are you seeing that? GAAP. Right, what does it say? They give the information required by the act in the manner so required. And second, they give a true and fair view in conformity with the accounting principle generally accepted in India. That is the gap of the state of affairs. State of affairs means balance sheet of the company as at 31st March 2022. Its profit, that means statement of the profit and loss, including the OCI, the other comprehensive income. Its cash flows, that means the cash flow statement. The changes in equity, that means the statement of changes in the equity for the year ended on that date. And so in our opinion and to the best of our information and according to the explanation given to us, the aforesaid standalone financial statements, one, it gives the information required by the act in the manner so required, and second, it gives a true and fair view. Right? It gives a true and fair view in conformity with the accounting principle generally accepted in India of the state of affairs, its profit, including the OCI, cash flows, and the changes in equity for the year ended on that date. Right? So this is the objective of the auditor, to express an opinion on the true and fair view of the financial statements. Is everybody getting that? To express an opinion on the true and fair view. Not true and correct. It is true and fair view of the financial statements. Okay. Right. So now you have been appointed as an auditor. And what is your objective? You have to express an opinion on the true and fair view. But now the question is, right, so we come to section 141, which is regarding the qualifications and the disqualifications of the company auditor. Okay, who can do the audit of a company? Right, who can do the audit of a company? So who can be appointed as an auditor of a company? It says a chartered accountant. Right, a chartered accountant. Okay, when would you be called a chartered accountant? After you clear CA final, both groups. Okay, after you complete your articleship, after you complete the orientation or the GMCS, and the General Management Communication Skill course, which is there, advanced ITT and all those courses, and then you apply to the institute for the membership. Then you apply to the institute for the membership, and then institute gives you the, enters your name in their register of member. And so institute, just as there is a register of companies, there is also a register of the members of the ICAI. And once your name is entered into the register of members, right, then you get your membership number from the institute. You get your membership number from the institute, right? So your name is entered into the register of members and you get your membership number from the ICAI, and then you are called as a chartered accountant, right? The moment your name is entered into the register of member, you become an associate chartered accountant. You become an associate chartered accountant, and an associate chartered accountant in continuous practice for 5 years. Right, an associate chartered accountant for continuous practice of 5 years then becomes a fellow chartered accountant, right? Then he becomes the FCA. So that's the fellow chartered accountant, right? So fellow chartered accountant. Okay. Now, once you become a chartered accountant, you have two options, right? One, either you be in service or you get into the practice, right? You start doing practice as a chartered accountant. Either you work in Infosys or EY or PwC or any company or any organization you work, right? That is, you are in employment, you are in the employment, and here you are doing your practice. That means it is as good as you are having your own business. Okay, if I apply to the institute only for my member, if I have to do service, then I only need to apply to the institute for the membership, and then I get my membership number from the institute, and then I become an associate chartered accountant. But in case if I want to do practice, then I have to apply to the institute for the membership, and I also need to apply to the institute for the COP, that is the certificate of the practice, right? The COP, the certificate of the practice. Right? And only when I am a member of the institute and I have a certificate of practice, only then I can be appointed as an auditor of a company. Right? You understand, I am a chartered accountant, but I am in service. Can I be appointed as an auditor of a company? No. And I am in practice, but I have not taken my COP. Then again, no. You have to be a member of the institute. You have to obtain your COP from the institute. Only then you can be appointed as an auditor of a company. Right? So say somebody has done their company secretary or they have done their cost accountancy. Can they be appointed as an auditor of a company? No, they cannot be appointed. Chartered accountant, can he be appointed as an auditor of the company? Yes, but only if he holds a COP, the membership. He has to become a member of the institute and also hold the certificate of practice of the ICAI, and the CA with COP of the ICAI. Right? Say I have written the exam, CPA exams, US CPA exams, Certified Public Accountant, and of the American Institute of Certified Public Accountant, and I become a CPA. Can I be appointed as an auditor of an Indian company? No, only a chartered accountant of the ICAI can be appointed as an auditor of a company. You understand? You've done your chartered accountancy from that England and Wales Institute, and Institute of Chartered Accountants of England and Wales. Can you be appointed as an auditor of an Indian company? No. It's a CA with COP of the ICAI can be appointed as an auditor of the company. Is it clear to all of you? Okay. Right. So one, now that I have decided to do my practice, one, what I can do, I can practice as a sole proprietor. Are you all with me? One, what I can do, I can practice as a sole proprietor, as an individual person. Or second, what I can do, I can practice as a firm. Right? Or third, what I can do, I can practice with the format of an LLP, right? The limited liability partnership. Okay, right? So individual chartered accountant, can he be appointed as an auditor? Yes, with COP of the ICAI. Can a firm be appointed as an auditor of a company? Can an individual be appointed? Yes. Can a firm be appointed as an auditor of a company? Yes. But now, in a firm, what does it say? There are other partners also. Firm, no? Partnership firm. So, in my partnership firm, I have CA, I have CS, I have CMA, I have advocate, I have engineer, I have architect. You know, I have advocate, I have architect, I have engineer in my firm. And now, can this firm be appointed as an auditor of a company? Can this firm be appointed as an auditor of a company? It says a firm can be appointed as an auditor of the company, provided majority of the partners are chartered accountants practicing in India. And a majority of the partners are the chartered accountants. Majority, that is more than 50% of the partners of the firm should be the chartered accountants. You know, there was something called as Companies Act 1956. And now there is Company Law 2000, Companies Act 2013. You know, Companies Act 1956 mein kya tha? There it says all partners of the firm should be chartered accountants. In Companies Act 1956, it says all partners of the firm. So if I have a partnership firm and there are 10 partners in my firm, all 10 should be chartered accountants. But in today's law, what does it say? Majority of the partners of the firm should be the chartered accountants. Majority, right? So in my CA firm, say there are 10 partners, and out of these 10 partners, 6 are chartered accountants and 4 are company secretary. Can this firm be appointed as an auditor of a company? Yes. Why? Because majority of the partners are the chartered accountants. Say it was the other way around, 4 CAs and 6 company secretaries. Then can it be appointed as an auditor? No. Then it cannot be appointed as an auditor. Are you understanding that? Majority of the partners of the firm are chartered accountants practicing in India. Right? So what does it say? Either an individual chartered accountant or a firm can be appointed as an auditor of a company. But what does it say for a firm where majority of the partners of the firm are chartered accountants practicing in India? So earlier it used to be a partnership firm where all the partners had to be the chartered account, but today's situation, what does it say? Majority of the partners of the firm should be the chartered accountant. So now can CA, CS, CMA, right, advocate, architect, engineer, can all of them come together and, you know, start a partnership firm? Can all these people come together and start a partnership firm? Yes. Now this is something called as the MDP. What is MDP? Multidisciplinary partnership. This is one-stop solution for all your service requirement. It's a multidisciplinary partnership. And a multidisciplinary partnership. Can I still have a firm where all the partners are chartered accountants? Yes, I can still have a firm where all the partners are chartered accountants. In that case, what I will get from ICAI is the firm's registration number. In that case, what I will get from ICAI, I have to get my firm registered with the ICAI. So what I will get from ICAI is the firm registration number. But if I create a MDP, then what I will get from the ICAI is the MDP number, the multidisciplinary partnership number. And multidisciplinary partnership, at least majority of the partners of the firm should be chartered accountants practicing in India. And so this is a new evolution which has come in the practice of chartered accountancy. Okay, now company secretary, cost accountant, and all of these fellows, they can join hands together and provide the multidisciplinary services under one roof. Are you understanding that, right? So one, you can get the firm registration number, right? So if you look at the Infosys report over here, at the end of the report, see what they have written: for DTS and Associates, LLP, Chartered Accountants, ICAI, firm registration number. So what is given over there is the firm registration number. So that means it's a partnership firm only with the Chartered Accountants. Had it been a multidisciplinary firm, then here they would have written the multidisciplinary partnership number. Okay. Yes, just to tell you regarding the further developments in the profession, nowadays there is a concept wherein you could also create a network. What do you mean by a network over here? Okay, say there is a firm in North India called as ABC and Company Chartered Accountants. And ABC and Company Chartered Accountants, it is there in the North India and it is specialized into the stat audit. Example, right? Say then there is a firm in East India called as DEF and Company Chartered Accountants, and they are there in the east part of the country and they are very good with the, say, internal audit. Right? Say then there is a firm in South India called as PQR and Company Chartered Accountants. It is there in the South India, and say it is very good with the tax audits. Have you heard tax audit? For assessees who are in business, if their receipts from the profession, you know, what you say, their turnover of the business exceeds 1 crore, right? Or for assessees who are in the profession, if their receipts exceed 50 lakh, then they have to get a tax audit done, right? So say they are very good in the tax audit. And then say there is another firm, LMN and Company Chartered Accountants, which is there in the West India, and say it is very good with the consultancy services. Example, and they are very good with their consultancy services. Okay, so right now you see each of these firms, they have their presence in a particular part of the country. Each of the CA firm, they are having their presence in a particular part of the country, and each one of them are having their own area of specialization. Like somebody is good at stat audit, somebody at internal, somebody at the tax audit, and some at the consultancy services or so. What if they all join hands together? They will get presence in other parts of the country, and plus, you know, they will have all specializations also put together. You understand? So these CA firms or these LLPs are now coming together and constituting something called as a network. Right? And again, this network of yours, you have to get it registered with the ICAI. And when you get your network registered with the ICAI, you get your NRN, you get the network registration number, right? You get the network registration number. So generally what they do, you know, they take the initials of each of the firms. So ADPL in my example, ADPL and affiliates. What they write after the name of the network? Affiliates. Right? After the name of the firm, what do they write? Firm or LLP, what do they write over there? They write associates, and ABC and Company Associates. Right? After the name of the network, what do they write after the name of the network? And affiliates, right? So that the moment you see anywhere and affiliates written, it has to come to your mind, okay, boss, this is a network. That is how you can distinguish between a firm and a network. You know, and then there are three options. What I told you, firm registration number, then multidisciplinary partnership number, and now I told you it could be the network registration number. Right? It could be the network registration number. Right? So these two are very recent developments of the ICAI, wherein they are now allowing you to form the multidisciplinary partnership, and they are also allowing you to do the network registration. Right? Network registration, right? So many CA firms can come together and they can form a network. Are you understanding that? So ICAI has issued the multidisciplinary partnership guidelines. They have issued the networking guidelines and all of those. Okay, right. So anyways, what are we talking about over here is section 140. Yes, everyone, are you with me? We are talking about section 141, which is regarding the qualifications and the disqualifications of the company auditor, right? Qualifications 141 subsection 1. What is 141 subsection 1? Who can be appointed as an auditor of a company? A person who is a chartered accountant on a firm where majority of the partners of the firm are the chartered accountants practicing in India. Right? So individual or firm can be appointed as an auditor. And then what does 141 subsection 2 say? A firm includes an LLP, but only those partners of the LLP who are the chartered accountants. Right? So firm includes an LLP, but only those partners of the LLP, limited liability partnership, who are the chartered accountants. Only they can be appointed as an auditor of the company. So in total, 3 varieties regarding who can be appointed as an auditor of a company. Either an individual, CA with COP of ICAI, or a firm where majority of the partners are CA with COP of ICAI, or an LLP again, but only those partners of the LLP who are the CA with COP of the ICAI, right? So these are the qualifications of the company auditor regarding who can be appointed as an auditor of a company, right? An individual chartered accountant, or a firm where majority of the partners of the firm are chartered accountants practicing in India. And what does 141 subsection 2 say? A firm includes an LLP, but only those members of the LLP who are chartered accountants are authorized to act and sign on behalf of the firm. Right, so LLP also, can it be having company secretary, cost accountant as their partners? LLP, yes. But now that LLP, can it be appointed as an auditor? Yes, but only where majority of the partners are the chartered accountants. Let me ask you a tricky question over here. Can an LLP have a company as a partner? Can an LLP have a company as a member of the LLP or a partner of that LLP? Right, so in case if that LLP has a company as a member, then that LLP cannot be appointed as an auditor of a company. You understand? Say there is an LLP, right? LLP, and in this LLP, CAA is a partner, CAB is a partner, CAC is a partner, and A and company is also a partner in this LLP. Right, so now what is happening? One of the member of the LLP is a body corporate. So now this body corporate cannot be appointed as a, what does it say, as the auditor of the company. So you need to check the partnership of the LLP. It should only be the individuals, right? It has to be the individuals over there. And what does it say? Majority of the individuals should be the chartered accountants practicing in India. It should be the majority of the partners should be the chartered accountants practicing in the India. Okay. Right, so over here, if we come into the company audit chapter, right, the first chapter that we are starting to discuss, I've already told you the sections. What does it say? Qualifications, right? What are the qualifications for the auditor? A person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. And chartered accountant also, what did I say? Not only the register of member, not only the membership number, but also should obtain the COP. If you go to any practicing chartered accountant's office, you see 4 certificates which have been framed over there and put in their background. You understand which 4 certificates generally they put over there? Their CA inter ka result, their CA final result, then in case if they've got a rank or something like that, and then they will put their membership ka, yes, registration number over there, and also they will put their certificate of practice. Right, you see these 4 certificates which have been framed and laminated and put over there in the office of the CA. Right, one side they have a library of book, a cupboard where all the income tax rules and all the accounting standard, those books are kept. Then another side, all the mementos and trophies and all of that which they have won over there. Right, then some particular god, whichever religion they follow, some particular or some gifts which they have received. And then you see these 4 certificates being put over there. Right, they put their inter result, their final result, their membership, and also their COP. Are you getting that? So what does it say? A person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant. So see, it is such a exclusive tie-up which ICAI has with the Ministry of Corporate Affairs. No allowing anybody else over here. GST audit, what they did? CA, CMA also. So then what chartered accountant did? They said abolish GST audit only. We want exclusivity. Only we should be allowed to do the audit. Like tax audits also, only chartered accountants. Exclusivity of the chartered accountant is over there. And it may be noted that a firm where majority of the partners of the firm practicing in India are qualified for appointment as an auditor may be appointed by its firm name to be the auditor of a company. So individual or a firm could be appointed. And what does 141 subsection 2 say? Where a firm including an LLP is appointed as an auditor of the company, only the partners who are the chartered accountant shall be authorized to act and sign on behalf of the firm. Right, so what are these? These are the qualifications of the company auditor. Individual, firm where majority of the partners are chartered accountants, and what is 141 subsection 2 say? Firm includes an LLP. Okay, right, now coming to 141 subsection 3, which is regarding the disqualifications of the company auditor, and certainly more interesting than the qualifications are the disqualifications of the company auditor, right? So now we talk about the disqualifications of the company auditor who cannot be appointed as an auditor of the company, right? So who cannot be appointed as an auditor of the company? We have 9 disqualifications for the company auditor, right? And before these 9 disqualifications, let us just write down a common sentence over there. A person shall not be eligible, right? A person shall not be eligible for appointment as an auditor of a company if, right? A person shall not be eligible for appointment as an auditor of a company if, and then you have the 9 disqualifications of the company auditor. Section 141 subsection 3, which is regarding the disqualifications of the company auditor who cannot be appointed as an auditor of a company, right? So what I did, I cleared my CA exams, and then I got my membership from the institute, then I got my certificate of practice from the institute, and then I created a company. I started a private company. You understand? Private limited company for doing my CA practice. And now I say, okay, now I want to do company audits. Is it possible that a CA has created a company in order to do a company audit? No. What is the first disqualification for the company auditor? 141(3)(a). It is the body corporate. Company form of organization, you cannot do the audit of a company. Right? Body corporate. But what is allowed? LLP, is it allowed? Limited liability partnership, is it allowed? Yes. So that is why it says body corporate other than LLP. Why? Because LLP is there in the list of the qualifications. LLP is there in the list of the qualifications, right? So body corporate, right? So did you say, oh, I am a CA and I am starting my company to do audits? No. Through a company, you cannot do the audit of a company. How you can do the audit of a company? Either as an individual or as a firm or as an LLP. Through company form, you cannot do the audit of a company. That is why you would have never heard of CAs creating a company. They always create a firm. They always create an LLP, or they practice as a sole proprietor. Is it right, everyone? Right. So what does it say? Body corporate other than the LLP. Okay. Now, say I am a CA with COP of ICAI, and I am to be appointed as an auditor of Growth Limited. Example. So CA Sparkle is to be appointed as an auditor of the Growth Limited, and now CA Sparkle is having the CA with COP of the ICAI. Can CA Sparkle be appointed as an auditor of Growth Limited? Is he qualified to be appointed as an auditor? Yes, he is qualified to be appointed as an auditor. But what happens? CA Sparkle, he is also a director in Growth Limited. Do you understand? Director, board of directors of a company, right? So he is a director in Growth Limited, or he is an employee of Growth Limited. He is an officer of Growth Limited. Now can CA Sparkle be appointed as an auditor of Growth Limited, though he is CA with COP of ICAI? Though he is CA with COP of ICAI, is he qualified to be appointed as an auditor? Is he eligible? Yes. But is he qualified? No, not qualified. Why? Because in audit, there is a very important concept that maker-checker should be different. If I am the maker of the books of account, of the financial statements, I should not be doing the checking of the same. The checking has to be done by an independent third party. It has to be done by an external person. If there is an employee of the company, this employee of the company only I am telling you, okay, you only do the audit of the books of account. Will it be objective checking? Will it be an objective examination? No. So what is the second disqualification given under the company law? Officer or employee of the company. You cannot be appointed as an auditor of the company. So if I am an officer of the company, that is I am a director of the company, I am an employee of the company, I am a key managerial personnel. Do you know key managerial personnel? Right, the CEO, CFO of the company, right? I am the VP finance, finance manager of the company, right? So can I be appointed as an auditor of the company? No. Okay, so I am CS Pakal. I want to do the audit of Growth Limited. But what is the problem? I created a company. Then it says out. You cannot be appointed as an auditor. Body corporate. Then what I did, I am an officer employee of the company. Can I be appointed as an auditor? You understand my points? I am a body corporate. Can I be appointed? No. Now I am an officer or employee of the company. Can I be appointed as an auditor of that company? No. Then now, okay, I am a CA with COP of ICAI. I am also a director in Growth Limited. Can I be appointed as an auditor? Can I be appointed as an auditor? No. But say I have my practice. I have my partnership firm. Okay, now in my partnership firm, I am a director in Growth Limited. So you told that, ma'am, you cannot be appointed as an auditor. Okay, but now I have my practice. You said I cannot be appointed, but I have my partners in my firm, or I have my employees in my firm. So I cannot do the audit because I am an officer or employee of the company. Can I tell my partners, my employees that you do the audit of Growth Limited? I cannot do the audit. Why? Because I am an officer employee of the company. So then what I do? I tell my partners, my employees, okay, you do the audit of Growth Limited. No. 141(3)(c). What does it say? A person who is in the employment or is in the partnership of an officer or employee of the company. Officer or employee of the company, right? So in the employment of an officer or employment of an employee of the company, or in partnership with an officer or partnership of an employee of the company. Now 100% I need to explain this again, or did you understand? You understand? Yes, say, I'll give you time to write down this, okay? That one particular slide, maybe you can write it later. So there is a person. And now what does it say? Partner or employee. This person is a partner or employee of an officer or employee of the company. So simple word. Remember that I am a director in Growth Limited. I am a CA with COP of ICI, but I am a director in Growth Limited. So can I be appointed? No, I cannot be appointed under 141(3)(b), officer or employee of the company. But now my partners, my employees, can they be appointed as an auditor? No, even they cannot be appointed as an auditor under 141(3)(c). What does it say? So this person, he is a partner of an officer or partner of an employee of the company. So I am the officer of the company and this person is my partner or this person is my employee. Can they be appointed? No. Or I am an employee of the company and I am an employee and this person is my partner or this person is my employee. So what does it say? Employee of an officer or employee of an employee of the company. Oh my God. Say again. Partner of an officer, partner of an employee, employee of an officer, employee of an employee of the company. Means what? Somebody please explain. Oh. Every answer starts with oh. Okay. Tell me. What you are writing? What you are talking? Somebody is a partner, out. And somebody is an employee officer of the company, out. Then no, if you are associated as a partner or an employee.
Any person associated with a partner or employee or officer as a partner or employer.
Correct. Any person who is a officer employee and then any other that officer employee to out. But any person who is associated with that officer employee as a partner or as an employee, even that person would be out. So in 141(3)(b), I am an officer employee of the company. I cannot be appointed as an auditor. My partners, my employees, even they cannot be appointed as an auditor of the company. Simple. You understand? One, body corporate other than LLP. B, officer or employee of the company. C, a person who is a partner or who is in the employment of an officer or employee of the company cannot be appointed as an auditor of the company. Okay, that is 141.3 C, 141.3 C, right? Now coming to the big one over there, 141.3 D. Right, 141.3 D. What does 141.3 D say? Person, relative or partner. Person, relative or partner. Right, so me, my relatives and my partners. Are you understanding? I myself, my relatives and my partner. Okay, what does it say? Now what do you mean by relative? Person, partner, relative. Right, so if you are in Hindu undivided family, then it says the members of the HUF, all the members of the Hindu undivided family, sorry, are your relatives, right? Are your relatives. However, say it's not an Hindu undivided family, then who comes first in the relative? Parents. Today's time change. Parents, yes, relatives include the spouse, right? Relative includes the spouse, and apart from the spouse, what is included in the definition of the relative? It says the father, mother, brother, sister, son, daughter, son's wife, daughter's husband, included in the definition of relative. So who are your relatives? Spouse. Apart from spouse, father, mother, brother, sister, son, daughter, son's wife and daughter's husband. Father-in-law, mother-in-law, brother-in-law, sister-in-law. Are they there? No, they are not included in the definition of relative. Normally you'll say, ma'am, father-in-law, mother-in-law, relative. But here, no. As per company law, no. Father, mother, brother, sister, son, daughter, son's wife, daughter's husband. Included in the definition of the relative. Then what does it say? Father includes the stepfather. Right? So father includes the stepfather. Mother includes the stepmother. Brother includes the stepbrother. Sister includes the stepsister. Son includes the stepson. But daughter does not include stepdaughter. Why? That is how company law has been defined. They said daughter does not include stepdaughter. Then what about son's wife and daughter's husband? Can they be step? They are anyways outsider. Can son's wife and daughter's husband be step? No, they are anyways outsider. You understand? No. So only who can be step is the father, mother, brother, sister and the son. Daughter not included in the definition, stepdaughter not included in the definition of relative. It says inheritance. Spouse, how can wife be step? How can wife be step? Main income, other income, like that. Expenditure, not income. Bankrupt, okay. Expenditure, bankrupt, okay. Full experience. Stepson's wife. Yeah, if stepson, then stepson's wife also included in the definition. Okay. Right. So now here we look into the definition of relative. So if I want to do the audit of a company, then who all comes into the definition of relative? Spouse, father, mother, brother, sister, son, daughter, son's wife, daughters, husband, father includes stepfather, mother includes stepmother, brother includes stepbrother, sister includes stepsister, son includes stepson, but daughter does not include the stepdaughter. Okay, right. So what does it say? Person, relative, or the partner. So if I, CA Sparkle, have to be appointed as an auditor of Growth Limited, me, my relatives, or my partners. You understand partnership firm? I create a partnership firm with the, is partnership with other CAs, or majority of the partners are CA. So what does it say? Partner. And then you have 141 3D1. And are you getting it? 141 3D1, 3D2 and 3D3. 141 3. What is 141 3? Disqualification. What is D? Person, relative, or partner. And then what is 141 3D1? Holds any security of or interest in. Holds any security of or interest in. Holds any security of, any security, that is any shares of the company or any interest in the company. Who cannot hold? Person, relative, or partner. Person, relative, partner holds any security of or interest in company, right? Holding company, subsidiary company, subsidiary company, associate company, and any other subsidiary company of that holding company. So simple. If I want to do the audit of Reliance Industries, if I want to do the audit of Reliance Industry, me, my relatives, my partner should not hold any share of Reliance, should not hold any share of the holding company of Reliance, should not hold any share of the subsidiary companies of Reliance, should not hold any shares of the associate company of Reliance or any other subsidiary of that holding company. So if I want to do the audit of Growth Limited, I cannot hold the share of Growth Limited, I cannot hold the share of the holding company of Growth Limited, I cannot hold the shares of the subsidiary company of Growth Limited, of the associate company of Growth Limited, or any other subsidiary company of that holding company. Any other subsidiary company of that holding company. Okay, what does it say? Person, partner, relative holds any security of or interest in 5 companies. So for the purpose of 141 3D, how many companies do we have over there? 5 companies. Right, 141 3D. How many companies do we have over there? 5 companies. So if I want to do the audit of Tata Motors, what does it say? I cannot hold a share of Tata Motors, holding of Tata, subsidiary of Tata, associate of Tata, any other subsidiaries of the holding company, I cannot hold the shares. Okay. Now, what does it say? Person, partner, relative. Relative very upset. Relative says, you want to do the audit, because you want to do the audit, I cannot hold the share. No, not done. I will hold the share. 100% I will purchase the share. You understand? So there is an exception. So there is a proviso given over there. Okay, person, partner, out. You can never hold a single share. If I am the auditor, I cannot hold a single share. My partners, they cannot hold a single share. But my relatives, they can hold a security up to the face value of rupees 1 lakh. And our relatives, they can hold the securities. Relatives, they can hold the securities. However, relatives, they can hold the security up to the face value of rupees 1 lakh. However, relative can hold the securities up to the face value of rupees 1 lakh in the company. Up to the face value of rupees 1 lakh in the company. Okay, right? Person, partner, relative, what did I tell you? 5 companies. They cannot hold security of or interest in. Okay, however, relative can hold the securities up to the face value of rupees 1 lakh in the company. Up to the face value of rupees 1 lakh in the company. Okay, now listen to me. I want a good answer, everyone. My father is holding 20,000 face value shares My father is holding 20,000 rupees face value shares of the subsidiary of Growth Limited. Can I do the audit of Growth Limited? My it is 2 lakh nahi re, 20,000 is face value. Matlab rupees 20,000. My father is holding 20,000 rupees face value shares of the subsidiary of Growth Limited. Can I do the audit of Growth Limited? No. Relative can hold security up to the face value of rupees 1 lakh in the company. No. Holding company, subsidiary company, associate company, any other subsidiary of that holding company? No. Okay. My father is holding face value 20,000 rupees shares in Growth Limited. Can I do the audit of Growth Limited? Yes. The exception for the relative to hold the security up to the face value of rupees 1 lakh is only in the company. It is not in holding subsidiary, associate or any other subsidiary of that holding company. Are you able to follow this, everyone? Right? The exception for the relative is only in the company. Okay. So now each relative 1 lakh. Aggregate all relatives put together, it should not exceed the face value of rupees 1 lakh. Okay. Now listen to me carefully. My sister is holding 80,000 face value shares of Growth Limited. My sister is holding rupees 80,000 face value shares of Growth Limited. Can I do the audit of Growth Limited? My sister is holding face value 80,000 rupees shares of Growth Limited. Can I do the audit of Growth Limited? Yes. Now what happened? Growth Limited came up with a bonus issue. Bonus shares of 1:1. You understand? That is why my sister's shares from 80,000 plus 80,000, it became 1,60,000. So now has it exceeded the limit of 1 lakh? Yes. Has relative exceeded the limit? Has relative exceeded the limit? Yes. So what does it say? Now again there is a grace period given over here. Okay, corrective action can be taken, has to be taken by the relative within the 60 days. Corrective action. If I hold a share, can I take the corrective action within 60 days? No, I can never hold a share. My partners, they can never hold a share. But say relative happens to hold a share of more than 1 lakh. Then what does it say? There is a grace period given of the 60 days to take the corrective action. Right? Grace period. Like say, spouse working in Big Four. Now, Big Four is famous for their late sittings. I hope you know the Big Fours. KPMG, Deloitte, EY, PwC. Okay. Right. So now, say husband working in a Big Four. Every day coming late from office. And now wife is also chartered accountant. She knows qualification, disqualification of company auditor. Telling husband every day, tomorrow come on time, we all will have dinner together. Tomorrow come on time, we all will have dinner together. Husband same story, coming at 2 o'clock in the morning, 3 o'clock, 4 o'clock and everything. Wife irritated, frustrated, what you say, taking some Devi roop over there. Okay, then out of that roop over there, that particular avatar over there. Okay, what she does? Next day morning, BSc India, NSc India, purchases shares of 1,20,000. Say, go to office. Which company audit you are doing? Growth Limited, no problem. She has a demat account, purchases 1,20,000 shares, say no problem. Nice? Blackmailing. So now you'll have to manofy, you'll have to convince her within 60 days. They say, I will not, he'll have to tell her, I'll not be able to sponsor your shopping. In case if I am not able to do the audit, so you please sell the shares. So how many days time is given? Right, 60 days. So if relative exceeds the limit, then corrective action can be taken within 60 days. But the exception for the corrective action, the grace period is only for the relative. You understand? The grace period for taking the corrective action is only for the relative. I can never hold a share. My partners, you say your partner is saying, "Arey, today I will purchase a share, tomorrow I will sell it, within 60 days I will sell it, you don't worry." No. Person, partner, zero. You can never ever hold a share. But relative, they can hold up to the face value of rupees 1 lakh forever. If they exceed the 1 lakh, then corrective action can be taken within the 60 days. Are you understanding that, everyone? Okay. Right. So person, partner, relative holds any security of or interest in 5 companies. Which are the 5 companies? Which are the 5 companies? Company, holding company, subsidiary company, associate company, any other subsidiary of that holding company, right? Holds any security of or interest in. Then 141 3D2. What does it say? Person, partner, relative, all three together. Person, relative or the partner is indebted to any of the 5 companies. Which 5 companies? Same 5. Company, holding, subsidiary, associate, any other subsidiary of that holding company in excess of rupees 5 lakh. Right? So indebtedness up to rupees 5 lakh allowed. Exceeding rupees 5 lakh not allowed. Right? So indebtedness for all the 3 in all the 5. Do you understand this? For all the 3 means person, relative and partner. Are you getting this? Person, relative or the partner cannot be indebted to company, holding company, subsidiary company, associate company, any other subsidiary of that holding company for an amount exceeding rupees 5 lakh. Right? Up to rupees 5 lakh allowed. 5 lakh 1 rupee disqualified to be appointed as an auditor of the company. Right? 5 lakh 1 rupee disqualified to be appointed as an auditor of the company. Right? So say I have to be appointed as an auditor of Growth Limited. And I have taken a loan of 7 lakh from Growth Limited and the entire amount of loan is not yet repaid. It is outstanding. Can I be appointed as an auditor of Growth Limited? No. Why? Because I am indebted. I am indebted for an amount exceeding rupees 5 lakh. Either me or say my relative has taken a loan of 7 lakh. Can I do the audit? No, my partner has taken a loan of more than 5 lakh. Can I do the audit? No, I cannot be appointed as an auditor. Do you know this? You know, now we are studying Companies Act 2013. There the limit of indebtedness is 5 lakh. You know, in Companies Act 1956, the limit of indebtedness was 1,000. 1,000. 1956, that time 1,000 also big amount. And that time 1,000 also big amount over there. But today's time it has been increased to inflation. So they have increased it to 5 lakh over there today. Right? So indebtedness exceeding rupees 5 lakh. Here is there an exception? Person, partner, relative, indebtedness. Is there an exception? Yes, you see, why there is no exception? See, security interest, what is the exception? Relative can hold the security up to the face value of rupees 1 lakh in the company. For indebtedness, is there any exception? Yes. All the 3, person, partner, relative, in all the 5 companies can be indebted up to rupees 5 lakh. In excess of rupees 5 lakh, it is not allowed. Exception, no. They say you cannot hold security interest. But what was the exception? Relative, you can hold security up to the face value of rupees 1 lakh in the company. Now what about indebtedness? Can they not be indebted? It says they can be indebted. Who? Now the exception is for all the 3. Person, partner, relative in all the 5 companies. And what is the overall limit for the indebtedness? Up to rupees 5 lakh. No, aggregate, not for each, for all put together. Are you understanding that? What is the exception? In first exception, is there person or partner? Only relative is there for the exception, and that too only in the company, and that too only up to the face value of rupees 1 lakh. And if they exceed the amount, then corrective action has to be taken within the 60 days. Are you understanding that? Now second one, what does it say? Indebtedness. Indebtedness exceeding rupees 5 lakh, out. But up to rupees 5 lakh for person, partner, relative in all the 5 companies, like company, holding, subsidiary, associate, any other subsidiary of that holding company, up to rupees 5 lakh allowed. You will still be qualified to be appointed as an auditor of the company. Say I have taken a loan of 3 lakh and it is outstanding. Am I still qualified to be appointed as an auditor of Growth Limited? Yes, because indebtedness is not exceeding rupees 5 lakh. Okay. Now I have not taken a loan. Are you understanding? There is Growth Limited. A third person has taken a loan of Growth Limited from 2 lakh, and what I have done, I have given the guarantee. Who has given the guarantee? Person, partner, relative. They have given the guarantee. Okay? If this person does not repay the loan, we will give you the money. So what was situation 2? Where you yourself had taken the loan. So indebtedness. Now what has happened? Some third person has taken the loan and you have given the guarantee that if they don't repay, then I will repay the loan. So now what does it say? 141 3D3. What is 141 3D3? Person, partner or relative has given guarantee. Yes, again for all the 3 in any of the 5 companies exceeding rupees 1 lakh. Exceeding rupees 1 lakh. Right, so up to rupees 1 lakh by any of the 3, person, partner, relative, in any of the 5, is guarantee allowed to be given? Up to rupees 1 lakh? Yes. In any of the 5 companies? Yes. But exceeding rupees 1 lakh, then you are disqualified to be appointed as an auditor of the company. Right, then you are disqualified to be appointed as an auditor of the company. Right, so what does it say? Person, partner or relative holds any security of or interest in 5 companies. However, relative can hold the security up to the face value of rupees 1 lakh in the company. If relative exceeds the limit, then corrective action can be taken within the 60 days. Then what is 141 3D2? Person, partner, relative is indebted for an amount exceeding rupees 5 lakh in the 5 companies. That means up to rupees 5 lakh for all the 3 in all the 5. Do you understand 3 and 5, everyone? Person, relative, partner, 3 and 5 companies. What does it say? Up to rupees 5 lakh is allowed. And then what is the next one? Has given guarantee in connection to the indebtedness of a third person to any of the 5 companies by any of the 3 exceeding rupees 1 lakh. So up to rupees 1 lakh guarantee is allowed. Are you understanding that over here? Right. So what is the first disqualification of the company auditor? The following person shall not be eligible for appointment as an auditor of a company if it is a body corporate other than an LLP, then an officer or employee of the company. What does officer include? Director, manager, key managerial personnel and the shadow director. What is shadow director? Like a person who is accustomed to act in accordance with the directions or instruction. So Manmohan Singh is a classic example of shadow director. You understand? Accustomed to act in accordance with the direction. So actually this person does not take decision, any decision on their own. All decisions somebody else tells them that take this decision and then they take the decision. So such person is referred to as a shadow director who is taking decisions based on the, directions from some another person. Right, then what is 141 3C? A person whose partner or who is in the employment of an officer or employee of the company. Did we study this? Partner of an officer, employee of an officer, partner of an employee or an employee of an employee of the company. Then a person who or his relative or the partner. So person, relative or the partner is holding any security of or interest in company, subsidiary, holding, associate or a subsidiary of such holding company. So that's what I told you, 5. And however, what does it say? Relative may hold the security of an amount face value not exceeding rupees 1 lakh. It may be noted that the condition of 1 lakh wherever relevant will also be applicable in case of a company not having the share capital. It may be noted that in the event of acquiring any interest or security by a relative above the threshold prescribed, the corrective action to maintain the limit as specified shall be taken by the auditor within 60 days of the acquisition of the interest. The value of shares 1 lakh that can be held by the relative is the face value and not the market value. The limit of 1 lakh would be applicable where the securities are held by the relative of an auditor and not where the securities are held by the auditor or the partner. That's what we said, na? The exception is only for the relative. In case if an auditor or his partner holds any security of even a small value, that I am holding 1 share of Growth Limited, can I do the audit of Growth Limited? I'm holding 1 share, just 1 share. My partners are holding 1 share of Growth Limited. Can I do the audit of Growth Limited? No, I cannot do the audit. Even of a small amount will be disqualification. And grace period of 60 days for corrective action is given only to the relative. This is not applicable to the auditor or the partner. Then the term relative as defined under Companies Act, anyone who is related to another as a member of the HUF, Hindu undivided family. Then husband and wife, that is relative includes the spouse, then father including the stepfather, mother including the stepmother, son including the stepson, son's wife, then daughter is daughter's husband, brother including the stepbrother, and sister including the stepsister. Are you getting this? Relative? Right. And then what is 141(3)(d)(2) is indebted. Indebted to company, subsidiary, associate, associate or any other subsidiary of that holding company in excess of rupees 5 lakh, or has given a guarantee or provided any security in connection with the indebtedness of any third person, again to company, subsidiary, holding associate or a subsidiary of such holding company in excess of rupees 1 lakh. And what is the common sentence we had? Person or his relative or the partner. So person, relative or partner. Are you getting that? Person, relative or partner is holding any security of or interest in or is indebted or has given a guarantee. And what does it say? A person shall be disqualified to be appointed as an auditor if he or his relative or his partner, that means any of the three, is indebted in excess of rupees 5 lakh to company, subsidiary, holding associate or a subsidiary of such holding company. So I told you na, any of the three in any of the 5 indebted exceeding rupees 5 lakh, and guarantee any of the 3 in any of the 5, guarantee given in excess of rupees 1 lakh. Are you able to understand what we are discussing over here? Everyone, are you all with me? Right, so what have we studied so far? The 4 disqualifications of the company auditor, A, B, C and D. Right, we have 9 disqualifications of the company auditor. Right, so after the break we look into the remaining disqualifications of the company auditor. Then also look into section 144 and then come to section 139 and 140. 139 is regarding the appointment of the company auditor and 140 is regarding the removal of the company auditor. Once we prepare this entire chart, I will give you some time to copy down this particular chart. Okay, I'll give you some time to copy down this chart, right? So let's take a break and we begin again at 10:30. Okay. That is the schedule given to me.